now step into part 2 of this capsule. First up, we must know what is the distinction between direct tax and indirect tax. We must also get to know what kind of tax GST is. And then we must understand as to what are the taxes that GST acts. Basically, there are two types of taxes: direct tax and indirect tax. Direct tax is a tax whose impact and its incidence is on the one and the same percent. If I were to cut out that economic jargon, what it means is that the person who is expected to pay the tax is the one who also actually ends up paying the tax. Income tax is a classic example of direct tax. You, the assessee, you, the earner of the income, is expected to pay income tax to the government of India. You cannot pass on this burden to a third party. In sharp contrast, in the case of indirect tax, the impact is on 1% and the incidence is on a completely different percent. To give you a specific example, if I am a supplier of goods, the government of India expects me to pay the GST. However, it is clearly understood between the government of India and me, as also between the government of India and the citizens of India, that it is the one who buys the goods or the one who is the recipient of the service will have to actually bear the brunt of the tax. In short, I, the supplier of goods, collect the tax from the recipient of goods and hand it over to the third party. In a very different language, it means that the supplier of goods is acting as the honest middleman between the citizen of India and the government of India. If for some reason the citizen of India is unwilling to pay the tax, it is my job as a supplier to pay the tax to the government. The goods and services tax is an example of indirect tax. Direct taxes are those that companies pay on profit and individuals pay on their wealth, on their salary, all the income or rewards on their investments, whatever that the individuals get, they pay tax on that. Now those taxes will have to be proportionate to the amount of wealth or amount of money that one makes. Higher your income, higher should be the tax, and that is a philosophy that is followed the world over. Whereas indirect taxes on goods and services is slightly different. Tax that is paid on goods and services is equitable. Whether a rich man buys a kilo of potato or a poor man buys a kilo of potato, the tax is the same. So given the indirect or the equitable nature of goods and services taxes, that's where the argument is, since it is uniformly applicable, let's not have it at a very high level. And where there are certain luxurious items that are consumed by the wealthy, maybe we should have a higher level of tax so that overall in the economy it is manageable. Direct tax और indirect tax, इन दोनों के बीच क्या फर्क है? इसकी जानकारी के लिए चलिए सीए इंस्टीट्यूट के पूर्व प्रेसिडेंट आर भूपति से पूछ लेते हैं. Indirect taxes is something like a transaction tax. It is paid by people across the country irrespective of the economic background. Even an ordinary person has to pay indirect taxes. Right from the milk which he consumes in the morning till the last product which he uses in the night, on all the products which he purchases, he pays the tax without his knowledge. That is indirect tax. Whereas direct taxes is for certain class of people who have income above a particular level. The affordability to pay income tax is assessed, then only income tax is levied. and Services Tax Act, or GST as it is called, when it kicks in, will spell the death knell of at least 10 taxes, 5 at the central level and 5 at the state level. At the central level, with the advent of GST, you will see the end of the central value-added tax, or what is today popularly known as CENVAT, or still better known as excise duty. It will also throw into the trash can central sales tax, which is a tax on interstate sale. We'll also see the demise of service tax, which is a tax on service rendered. Also getting dropped into the trash can will be the countervailing duty on imports and the additional special duty on inputs. At the state level, another 5 taxes are going to disappear. We'll see the end of value-added tax. We'll see the end of in what some states is referred to as a sales tax. We will see the end of an obnoxious tax called octroi, which is a tax on movement of goods from one state to another. We'll also see the death knell of entertainment tax, and finally of luxury tax. Now it is not as though the end of these 10 taxes will mean that we will become a tax haven. It is not as though that the death knell of these 10 taxes would mean that we will not pay any taxes. These 10 will be replaced by 1. These 10 will be replaced by the goods and services tax, which for all practical purpose is likely to be the one-stop tax on the indirect tax front, and hence its importance.